David here once again with Insuring Your Insurance, a special vlog where we tried to make insurance something other than boring. Last time, we discussed a secret society of somehow legal street racing and how that organization would have some very unique insurance needs. We also talked in general about how an organization's unique situation is going to govern the types of insurance they should buy. But what we didn't answer is exactly how much insurance is enough insurance. So we want to think about this in two dimensions: breadth and depth of coverage. Now, I tried really hard to think of a way to represent this as a 5-dimensional hypercube, but unfortunately tesseract don't really work out well as analogies and don't have much to do with insurance. Now that said, the breadth and depth of coverage, it's only kind of an analogy. It's actually pretty close to literal. You see, breadth refers to different kinds of loss categories that you'll need, and depth refers to how much coverage in that specific category you're going to have. Could the loss happen to you? Then you should get insurance. But depth, how much of that insurance should you get? Well, there are two factors to consider: the magnitude of a loss and the probability of a loss. So to use a surreal example, if you had a store in southern Wyoming, if you got hit by a hurricane, it'd probably wipe out your business. But you and I both know that you need hurricane insurance in Wyoming like the way you need UFO insurance in DC. If you got hit by a hurricane, yeah, it would wipe you out. And if aliens invade DC, it's probably the same thing. Businesses are not going to survive that. But the probability of either of those things happening is so low, you're probably not going to need insurance for hurricanes in Wyoming or UFO insurance anywhere outside of Area 51. Now, were you to move to the Gulf Coast or to Roswell, New Mexico? Well, you need better insurance for hurricanes and UFOs respectively. Now, of course, things get more complicated when we step out of the realm of impossibility and into the realm of probability. So say you run a daycare, you know all of your employees personally, and you take child safety seriously with good policies and proper screening. So you sincerely hope and pray, and you believe that no serious harm could ever come to the children under your care and control. You trust your employees. They're trustworthy people. Regardless, unlike UFOs, it is actually possible, however improbable, that something could go horrifically wrong at your daycare. This is an example of something where the magnitude is astronomical, even if the probability is quite low. Because a loss is so astronomical, if a child gets abused or seriously injured, a child care facility can justify paying higher premiums for insurance that cover losses associated with abuse allegations and investigations. And so, to summarize, you need to not just consider the probability of a loss, but the magnitude if that loss happens. So yes, you don't need hurricane insurance in Wyoming since that actually verges on the impossible, but you would still need insurance in other situations where a loss might be improbable, but could happen. Think of it like this. Insurance is a significant operating cost for almost every organization. And the cost of insurance can be quite high, but the cost of being uninsured is almost always going to be higher. Just like last time, you want to spend some time researching your needs and getting with insurance agents who understand your industry and the things which can go wrong in that industry. That's all I have to say this time. Signing off, but once again, remember, Tuesday, brief little update. Get to see a little bit what's going on behind the scenes here. Thanks so much, and I'll talk to you later.